Hi guys, how you doing today? It's your boy Naked Forest, and on those videos we're gonna be talking about the 15 minutes time frame. What you have to know about the 15 minutes time frame. So this is more like the lower time frame, and people get it all wrong when it comes to trading. They just go down straight to 15 minutes time frame and start to do the analysis. And it's cool if it works for you, but to be on the safer side, you have to start your markup with a top-down analysis, which simply means you start from higher time frame or weekly, daily, marking your way down to lower time frame. So 15 minutes are mostly for entries, just like the 1 hour, scaling in on the 1 hour. We use 15 minutes to trade what we see in the 1 hour, just to get that tighter entries and all of that. So first thing I'm going to talk about when it comes to 15 minutes time frame is adding more positions, on your trade. So why is it that? Because on the 15 minutes time frame, you get to see more impulse and correction rather than the 1 hour time frame. Okay. Let me give you guys an example. Let's say we have this trend to the downside on the 1 hour. We're having a strong impulse on the 1 hour, and I'll bet you that on the 15 minutes you might get one or two entries right here in the impulsive phase alone. So if you are taking notes and you're using this, we are using the 15 minutes on the impulsive phase alone. And this is just like I've said, this is the 1 hour trend that you can see, and we are looking for adding more positions within the 15 minutes, okay? Because we don't just press set because we see price going down. We need confirmations to enter. And on the 15 minutes, we're going to get that right there. So let's assume we have that 1 hour impulsive phase and we are looking to take a set position on that impulsive phase. Just because it's on 1 hour impulsive phase, we won't see a clearer entry if we're looking on the 1 hour. But if we go down to the 15 minutes time frame, definitely we're going to see an entry, which is an impulse, and also those tighter flag on 15 minutes. But overall, on the 1 hour, this is just one impulsive leg that shows like 2 to 3 strong bearish candles. But on 15 minutes, you can see we're going to see some correction within it. Okay, so we have like 2 entries right there on this 1 hour impulsive phase. So that's one of the reasons the 15 minutes is used for. Okay, putting more entries, adding more positions, scaling in on the 1 hour time frame, okay, using the 15 minutes time frame. Okay, I hope that makes sense to you guys, and I'm going to show you guys some example on the chart, by the way, when we are looking into that. Let's just go down to the chart. We have this is a 15 minutes time frame already, and this is EU. Sorry, this is GJ. Let's just focus on here that we have already. And if you can see, if you go down to the 1 hour time frame, you're going to see that, we have just one push to the downside, obviously strong candles with no entry. But looking at the 15 minutes time frame, we actually got an entry on this correction right here, as you can see, perfectly fine. So when we do conference, adding everything all together, I'm going to show you guys how we get to take entries on the 15 minutes. Again, when we are doing the intraday setup, it's not going to be on this. Just this call, just this particular section is just for you to know what the 15 minutes time frame is used for, okay? And just like that, and you can see also we have this impulse to the downside, and then we had a 15 minutes entry right here also, as you can see. So we had another entry, just in case you missed the first impulse, we had another correction right there. So 15 minutes is used for adding more position. Let's say we've entered from the top already, or from the top. So we get to see we have another entry here, another entry here. So anytime we see those corrections on downtrend, we just love to take more entries on our trade that we are already in. And you can see from here also, and it happens everywhere. And you can see we had this ascending channel, so it's going to be clearer on the 15 minutes time frame, scaling in. And if that is a high on 1 hour, for example, we're just going to keep dropping until we start to see this correction. But if you are looking at the 15 minutes time frame to scale in after you took the sell from the top, for example, you're going to see we had a little bit of correction right here for a continuation to the downside, and that would have been your second entry where you want to take that on the breakout as well. Okay, so that is one of the use of the 15 minutes time frame. And another one is for better risk to reward ratio. Okay, so we get to better risk to reward in terms of placing our stop loss. So usually if we're looking at the 1 hour time frame, stop loss tends to be wider because of the size of the 1 hour time frame candle. Okay, but using the 15 minutes time frame, we're going to see, like, we're going to get some tight risk to reward entry. Let's say we have a particular high right here where we've seen price rejected before, and we are looking to take this particular trade for a double top, for an example. Now you can see price came to our high and decided to have candles on the 1 hour time frame. You're going to see our rejection candles get to be strong like this. So what does that mean? If we are taking the trade from the close of the 1 hour candle, that means our stop loss is going to be how many pips? 30 pips above the candle, for an example. So this right here is a stop loss. Just make that, let me make it red so you guys can see. So we get that. So stop loss is the red right there. Let's say we're targeting the low for TP, green, right there, TP. Now you can see that we are risking 20, let's say 30 pips here. We're risking 30 pips to get a TP of how many pips? Let's say 30 pips for an example. At least let's just say 30 pips for an example. So that's more like 1-to-1 risk to reward ratio. But if we are looking for entries on the 15 minutes time frame, when price got to this place and we get to start to look for reversal candle, and you all know how the retracement candle is. Same thing with the 1 hour retracement candle. That is exactly what we are looking on the 15 minutes when prices sit at our zone. We're looking at same thing. As soon as we see those candles, the pin bars, the engulfing candles, same candles we're trying to look at for, we're going to see that, oh, because of that candle, and then it is our retracement candle, but this time around is not on the 1 hour retracement candle, but rather it is on the 15 minutes time candle. So we took it on the 15 minutes. That means we want to get a tighter stop loss. Let's say now we're going to be risking like 15 pips, and then our TP target is going to be like 40 pips because of the 15 minutes. So it's used for, give us those tighter risks to reward, just to tighten our risks in terms of when we're taking trades, and then we're going to like get involved in a particular trade and get more chances of making more profits, and risking very small rather than risking big. Okay, so that's another use of the 15-minute time frame. And lastly, it is used for trade management. Trade management, whichever way you want to see it, maybe in terms of moving your stop loss, in terms of when to get out of the market, in terms of looking out for reversal and so on and so forth. So let's say in terms of moving stop loss to break even, let's say for an instant, we took this off this place right here. And if you are looking at 1 hour time frame, honestly, you won't see any structure that was broken because you took the say right here. Okay, but in 15 minutes, what can we see? We have a structure which is literally right here, has been broken to the downside. Now we know that, oh yes, it's safe to move our stop loss to break even right now. And then we get to see again what happened. Price broke out of that structure again. Now what do we have to do? We move our stop loss, which is the stop profit, to the structure that was broken. So anytime price breaks its structure, we just keep moving until it takes us out. So that depends on your own style of management. Okay, so until it takes us out, we're going to be out of the trade. So I hope that makes sense. So in terms of management of trade, we look at for that also. Okay, or if we see, oh, price has broken a structure, let's manually close our trade setup. So it works also like that, and those are the uses of the 15 minutes time frame. Very, very easy stuff to use. So you don't have to complicate this. Everything I said on this video, that's what we use the 15 minutes time frame for. Okay, we use it in the impulsive phase on the 1 hour when it's moving strong. Okay, impulsive phase on the 1 hour time frame, we go to 15 minutes time frame to scaling, adding more positions to our trade room, see correction. Because yes, of course, we can't just rush to jump into the 1 hour market anywhere because we see we have big red candles, which means we have to start selling. So no, we have to go down to the 15 minutes time frame to look for corrections also, because corrections confirms that yes, we're going to have a continuation to the downside. So I hope this video makes sense for you guys. If you guys have any question, please don't forget to message me on Twitter and I'll be there to answer your question. So have a good night. See you guys on the next video. Bye.